Welcome to Explain the Charts, where we break down complex market data into easy-to-understand insights. Today's focus is on the SPY, the S&P 500 ETF, and we'll be examining how current events impact its price action. Recent news headlines indicate record highs for the S&P 500, primarily driven by strong performance in the technology sector and positive comments from the Federal Reserve Chair Jerome Powell. This positive sentiment has fueled the rally in the SPY in the recent days. However, we must remain vigilant as other indicators reveal potential areas of concern. Let's delve into the charts to uncover the full picture. Here's the daily chart for SPY, showing the overall trend over the past few months. Notice the recent surge in prices, consistent with the positive market sentiment reflected in the news. But zoom in on the past couple of weeks, we observe some signs of consolidation as prices fluctuate within a tighter range before the recent rise. Now let's examine the 1-hour chart for a more granular perspective. We can observe that recent price movements on the hourly chart corroborate the consolidation we discussed on the daily chart. Price seems to be moving in relatively small ranges over several hours. This behavior supports a period of market indecision, suggesting neither strong bullish nor bearish dominance. Let's switch to the 15-minute chart to further examine the most recent price movements. Here we can observe the intraday price fluctuations within each candle, which help to make clearer support and resistance patterns. As we examine these charts, we see that major support exists around 580, with a slightly more important support line around 570. Resistance, on the other hand, currently lies around 605, with a further resistance at around 610. A break above 605 could signal a continued upward trend, potentially reaching 610, but a break below 580 may indicate a shift to a bearish sentiment, potentially leading prices towards 570. The likelihood of reaching 610 is 40% without any significant news driving further bullish sentiment. The chance of a price drop to 570 is 30% if negative news emerges. Watch the 605 and 580 levels closely to gauge potential changes in momentum. Additional factors, such as upcoming economic data releases, changes in interest rate policies, and geopolitical events, could influence price action. We need to remain flexible in our analysis and adjust our views as new information becomes available.